This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So this week, I thought I'd take a look at what are the cheapest infrastructure stocks that you can buy now here in 2024. And I didn't even know if there were any cheap ones. I thought there might be, but I did need to do some investigation to find out if any were values or if they're, I could just find the cheapest among this group. And it's also kind of tricky to find infrastructure stocks because what does that actually mean? There really isn't a category in the industry rank that's like, infrastructure, here it is. Here they are all listed because they're kind of in different groups, but still fall under that umbrella. And I've run across a few of the infrastructure stocks in recent months because they are so hot right now with the huge infrastructure bill that was passed. So we're building bridges, broadband networks, solar, all this stuff is being built. We're building a lot of manufacturing facilities right now for electric vehicles and the batteries that are used in there. We're building the chips from the CHIPS Act. That bill, gave $50 billion to build these chip manufacturing plants in the United States. And so there's a lot of all this construction going on, and all of this money is kind of moving through. And then we have the data centers. Those are being built by big tech. You have Microsoft, Alphabet, Meta, those big three paying billions of dollars every quarter right now, and Amazon, I guess, too, to build out these data centers just in the US, but globally, it's going to have to be done. But certainly a lot of money pouring into that in the US. So someone's got to build them. I've said this before on the show. And who is doing all of this stuff? And are any of them cheap? And what does it look like for earnings on some of these companies? So I started with a few names that I already knew from either prior podcasts or just my own research that I've been doing in this area. And I took a look at those stocks on Zacks.com. I put the ticker in to see what industry they were at. And then on the top on Zacks.com, when you do that, it'll say the industry rank there. And it has a link. And you can click on that and it gives you all the stocks in that particular industry. So that's how I was able to look at lists of other names, other companies on there that were also in that particular industry. But again, there is no just, infrastructure industry. It's under different categories. So I found some infrastructure stocks under building products - heavy construction. So that makes some sense, right? Then I found some under engineering R&D services. So that makes sense. Then I found some under the industry building products - miscellaneous. So you got to look under that. Then I also found one under technology services. So that's a little bit different. I didn't think I'd find any kind of tech thing. I'm sure there's a couple more areas that I just missed, but this gave me 5 stocks when I was looking through the lists under each of these industries. So I just stuck with those. And most of these cover the types of stocks I wanted to cover today, which are like who is building all this stuff out, who is providing the equipment to do it, who is, doing the design, the engineering side of things, and all of these stocks are those companies. So let's dive right in and see what I've discovered. Okay, so the first one is the stock that I use to try to find other ones. And I featured it on Zach's Market Edge podcast that I just did. And I was shocked at what it was doing. And very few people are talking about it. It's MCOR, which is ticker E as in Edward, M as in Mary, E as in Edward. And this is the one that's in the building products - heavy construction, because that is what they do. They have a market cap of $16.8 billion, so they are big, but they just had another great quarter, beat and a raise. And this industry is in the top 4% on the Zacks industry rank. So it's ranked 11th out of 250. And how do you get to the top of the list in the industry rank? That is from changes in the analysts' estimates for companies in that group. So I would think if I'm in the top 5%, most of the stocks in that group are going to be the higher ranked stocks, number ones and number twos, the strong buys and the buys, because the analysts are revising those earnings estimates higher. So something good is going on in building products, heavy construction right now. And we know this. That's why we're talking about it. This is a Zacks number one ranked stock. That's why it got featured in the best of the best. It also had a VGM score of A, which is also the top score. But how cheap is it? So it has a PE of 20.1. That's not super cheap as far as value is concerned, but on this list, it is. I guess it's the most expensive. I'm looking at my notes right now, but it is really coming through with the results. So earnings expected to be up 34.9% this year and another 8.8% next year. So it does have that strong earnings growth. So you are paying a little bit more for the earnings. Now the stock has soared this year to date up about 71%, but it is off the highs, which it hit at the end of May. So it's come down a bit. If you can get this even maybe a little cheaper, I would think that's pretty attractive given its growth options here. So I'm really liking MCOR. Everybody else does too, obviously. If it's up 71% this year, maybe wait for even further pullback on this one. But that ticker again is EME. It also pays a dividend, but very small now, yielding just 0.3%. Okay, the next one I found after I found MCOR, and I was looking down the list of the other stocks in that industry, and it is Granite Construction. And the ticker there is G as in George, V as in Victor, A as in Adam. GVA, and it's the largest diversified construction and construction materials company in the U.S. Only has a $3 billion market cap, though, but apparently that makes it very big in this category. Has a lot of asphalt plants, if that tells you anything. Record second quarter revenue, year over year second quarter revenue, and this one is actually cheap. As a value stock, PE of 13.2, but earnings expected to be up 67% this year to 524 versus 314 last year, and then another 8.2% in 2025. So analysts pretty bullish. It's a Zacks number 2 buy stock, and year to date it's up 36%, and now kind of busting out on this latest earnings report. So we don't have a lot of because it's only a $3 billion market cap, there's only one estimate on Granite. So it's not widely covered, which is why, none of us have ever really heard of it. It's not on anybody's radar, but that's why I like these infrastructure companies right now. They're looking good and nobody's really talking about them. So that's Granite Construction, ticker GVA. And then I switched over to another stock that I know is an infrastructure because I own it in the Value Investor. I think I've talked about it on the podcast in the past, and that is Sterling Infrastructure, ticker S as in Sam, T as in Tom, R as in Robert, L as in Larry. And I use this one as well to try to find a couple more companies in this area because they're in engineering R&D services. So different than the heavy construction side, they're on the engineering side. This industry is in the top 16% of the Zacks industry rank, which puts it 39th out of 250 industries. So that's still up there. It's top 16. I'll still take it. It's telling you something good is going on in that industry as well. And Sterling is still a Zacks number 1 ranked strong buy. It did beat and raise this last quarter. Just a fabulous earnings report. It has a market cap of $3.3 billion, so around the same size as Granite. And it also only has one estimate for the company, so lightly covered as well, because it's just smaller and there's just not enough analysts on these companies. PE is 19.2 right now. It is, the stock is off of its highs for the year. And so that makes it a little more attractive because it was getting a little bit, little more pricey there back in May when the stock was hitting and busting out to new all-time highs. But it's fallen back a bit, but still year to date up 27%. So still looking pretty good, but it is cheaper here. And 2024 earnings expected to be up 26% to 566 from 447. And then 2025 so far up 6.5%. But there's only one estimate, as I said, and so they're going to be conservative until we get a little closer to 2025. With this size company, we're going to wait until Sterling actually tells us what they're seeing for 2025 before we get even more bullish on that year. So I'm still liking this one. Zacks number one rank, as I mentioned, and the ticker again is STRL. And then sticking with the engineering R&D services, because I did look down the list on that one, I did pick one that was a number 4. This is the sell. And it's a sell because one of the estimates has been cut in the last 30 days, both for this year and next year. But earnings expected to be up 20.2% this fiscal year and another 10.7% next fiscal year. They did raise fiscal 2024 guidance. This was their third quarter that they just reported, and they had record Q3 performance with revenue up 13%. Backlog is still near all-time highs. So everything sounds good there. It's just that one estimate has been cut in the last 30 days and 2 in the last 60 days. So the Zacks rank doesn't like that. Nobody's raised. And so you get the number 4 rank. And this is AECOM, which is an infrastructure consulting firm. So they do bridges, water, new energy, all these hot things. And the ticker there is A as in Adam, C as in Charles, M as in Mary, ACM. Market cap's a little bit bigger on this one, 12.7 billion. PE is at 21.3. Okay, so I lied. So MCore does not have the highest PE. I knew someone had higher. And it's AECOM at 21.3, but that's not terrible either. And you do get that double-digit earnings growth for this fiscal year and next fiscal year with the backlog near all-time high. It's doing record performance. I'm willing to pay up a little bit more for that, but I'd like to see the shares maybe come back. This is the only one that hasn't really outperformed year to date. It's up just 3.6%, which is underperforming the S&P 500, which is up 15% in that same period year to date. So this one, not really going anywhere, just kind of moving sideways, even with all this good news. So I'd have to do a little more digging to find out why is that? Why does the street not like this one, but they really like Sterling? What's going on at AECOM? But that's what you have to investigate. So they do pay the dividend. Did I say it was 0.9%? So that is a little bit nicer than some of these others that pay pretty low or not at all. So AECOM, ticker ACM. And then I'm going to wrap it up with the equipment rentals because I can't leave them out of what's happening on infrastructure because all these companies are going to them to get the equipment to do everything. And you have to go with the big kahuna, United Rentals, ticker URI. So U as in United, R as in Robert, I is the ticker. They have a huge market cap now because they've just been acquiring all the smaller competitors over the last 15 to 20 years, I guess it is now, 46 billion in market cap. And they are under building products - miscellaneous. So that's their industry. And they're a number 3 hold right here. 2024 earnings expected to be up 8.9%. 2025, another 7%. So that's not too shabby, but I'd have to get it cheap enough. So PE right now is at 15.9. Is that cheap enough? I don't know. I'd like to get it under 15. URI up 24% year to date. and it is off the recent highs on the earnings. It's come down a bit on some of this weakness in the summer of 2024, but I need a bigger, pullback, maybe to get a PE of 13 or 14 times. That would be pretty attractive for United Rentals. But as long as we're having this big build out, as long as we're having all this infrastructure spending, United Rentals is like ground zero for it all, because they're the largest equipment rental company in North America, if not the world now. So keep that in mind if that's the area you're looking in. Dividend is paying 0.9% here as well. They finally started paying one a couple of years ago. So if you're a dividender, you can get one with United Rentals now. Did I say Zach's number 3 hold? I think I did, but not really surprised at that. Most stocks are number 3s. So that's United Rentals, URI. So there's some interesting names here. Some of you might say, oh, those are boring. But other than AECOM, most of the returns aren't quite so boring this year, right? They're all outperforming the S&P 500. URI is up 24% year to date, Sterling 27%, Granite 36.6%, and MCOR is the big kahuna, up 71% now, even after the recent weakness. So take a look at some of these infrastructure plays. You're going to have to snoop around to find them. There's some others that made the list that you might be familiar with that we've talked about on this podcast before, like Tutor Perini and Mastech. They are on these lists as well. And all of them are benefiting from this just tremendous infrastructure build out with the bridges, the airports, the broadband, the solar, electric vehicles, and now the data centers. So, and then there's other construction too that's going on. We're still building some hotels and casinos and government buildings and other things. So it's a good time to be in the infrastructure stocks. That's why I wanted to take a look at them. So use the Zacks, go on Zacks.com, put in some of these tickers, find the list. All you have to do is click on the industry rank link up at the top and go and look at some of the lists, get some ideas that way, and listen in on these conference calls. Always very interesting right now, because I can't believe how many are having like record quarters, record years, raising guidance. At the same time, we all think, it's not good out there. But this is one area of the economy that is, and it's fairly cheap. So should I answer my question from the beginning of the podcast? Are any of them cheap? I would say yes. Granite is cheap at 13 times. And the others aren't super expensive. I would like to get them a little cheaper. Might wait on the sidelines for a little bit more of a pullback on some of them. But if they do pull back even further than what they already have this summer, then it's looking real juicy, and I would like to be diving in. So let me recap the tickers again. We had MCOR, ticker EME. We had Granite Construction, ticker G, V as in Victor, A. We had Sterling Infrastructure, which is in the value investor portfolio here at Zacks, and that is S as in Sam, T as in Tom, R, L as in Larry, STRL. Then we had United Rentals, which is URI. And we also had AECOM, ticker ACM. And as always, I aim to bring you as many value stocks as I can every week, and there's a lot of them. So be sure to tune in. Get us on Apple Podcasts, get us on Spotify, get us on Amazon Music, get us on YouTube, on Zacks Podcasts, but get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.